Welcome everyone to the third episode of the NordSearch podcast, where we speak to leaders in the energy trading transition. Today, I'm delighted to be joined by Tom Darell, who is the CEO of Nord Pool, one of Europe's largest power markets. Tom, thank you for joining me today.
Thank you, Patrick, for having me.
Tom, if you wouldn't mind, could we start with just giving a brief overview of yourself and your responsibilities at Nord Pool, and for anyone that doesn't know what Nord Pool focus on as a business?
Yeah, absolutely. So starting with myself then, I've been in Nord Pool for nearly a couple of years now as the CEO. My background is I have a business background, a business degree from University of Oregon. I got an MBA from ESE on top of it, so I'm a sort of a business educated, and I've been mostly in technology companies throughout my career. I started in telecom industry, Capgemini, Ericsson. I got into energy side of it in 5-6 years ago in Volue, where I was heading up energy, and that led me to Nord Pool today. Yeah, that's a little bit about me. In terms of Nord Pool, we are a pan-European power exchange operating the market in 16 European countries. And we are also serving 4 other countries with our technology. So we are covering 20 markets in Europe today. And our main focus is the physical power market.
Awesome. Yeah, I was really looking forward to getting someone on from an exchange perspective to talk about the markets, because the last few episodes have been about people who are in the markets, leading prop firms or asset-backed trading. But from an exchange perspective, it's really interesting to get your thoughts today. I guess where I'd like to begin is like your view on the bigger picture of the energy trading transition as a whole.
Yeah, I mean it's an interesting question, because I think it's an interesting industry and in the first place, and I think there is so much going on right now, and I think the topic of energy transition is, if we start with the sort of root cause here, climate targets, climate change. The planet is heating up with very negative consequences if we are not able to reach the right sort of trajectory in terms of global heating, and in order to do that, we need to address to reduce the CO2 emissions quite drastically. And if you look at where the CO2 emissions are coming from, you see that 1/3 of it is related to electricity generation and heating. So that's the main sort of background for why we are going through this at times painful change, right?
Yeah, it's not easy, but nothing worthwhile ever is, eh?
No. But I think and if we dig a bit further into this topic, right? In order to so it means that we need to decarbonize the energy mix, and we are doing that by adding more renewable, predominantly wind and solar, but of course also nuclear is a clean technology. At the same time, we have decommissioned a lot of coal. We have also decommissioned nuclear in several countries, UK, Germany, in particular, Sweden as well. So we have less flexible, dispatchable sources of energy coming into the system, and we are replacing it with intermittent sources. And this is a challenge to the system, and this is a challenge to the market also. And that's why we are already now feeling that challenge in terms of being able to have a stable sort of balance in the system, because somehow we need to find a way to compensate for this lack of flexibility, and we need to be able to harness more flexibility on the demand side, as we lose flexibility on the production side. At sometimes we have too much energy, other times we have too little, or too little capacity in peak hours. And this is from a market perspective, market design perspective, also a challenge that we are in the middle of. I think we have managed well throughout 22 and 23, but it still has been a challenge. And I think that is something that preoccupies us as an exchange. We are a part of this ecosystem together with producers and TSOs and regulators and ministries and policymakers and exchanges are all sort of into this system together to try to find a way forward, because we need to enable much more renewable energy into the system over the next decade and the next decade after that.
So that comes with investment into renewables. But I think obviously we've seen the challenges recently in the news with the big renewable energy projects. And, I was speaking to Ørsted on a podcast just last week, and they were talking about obviously the problems that they've had in the US. So I guess it is really challenging, this investment in moving into renewables at the rate we need to.
Exactly. I think we need to speed up the time it takes to get new projects off the ground and for new assets to actually produce. We also need to speed up the investments in the transmission network and in the grids to be able to handle the expected increase in consumption as we electrify society more and more. So that's definitely something we also need to accelerate.
How do we do that when projects are getting cancelled because of the rise in interest rates and all the other complexities that the market's seeing? It was coined as a perfect storm by Ørsted when I spoke with them recently.
Yeah, I think that's there are several elements to that answer. I think one thing for sure is that we need the right regulation and the right financial incentives for doing this. One thing, of course, is to make sure that I mean, in the end, investors need to see that there is a business case for investing into renewable energy, and they have a predictability, a sufficient predictability on the future revenues from it. So that is more related to taxation sides of things, or mechanisms such as contract for difference, which is a part of the legislative discussion in Europe now, that for new technologies, there is probably a need for a governmental support scheme to make sure that there is some sort of lower level of guaranteed price for energy. So I think on one hand, I think that is really important. On the other hand, I think also on the cost side, we have seen increases lately, and I think it's that has been negative for the speed of new investments. And I think, for instance, offshore wind is one area where this discussion is quite central right now. I do think we have to remind ourselves, though, if you look at any new technology like onshore wind at one point in time, or photovoltaic or solar at one point in time, 10 years ago, these technologies were not really profitable without subsidies either. But we have seen such an immense decrease in cost as the technology is maturing, and the scale is going up. And I think we also need to expect that same development for other newer technologies like offshore wind, for instance, because that's what we always see. We see a technology maturity curve and an economy of scale effect over time. And I think sometimes we are not, in the current discussion, we are not taking in that perspective enough.
Yeah. So I think with renewable investment, you just got to have that long-term view.
Yeah.
And I guess you can't be worried about next quarter.
No, I think I understand that we need a sufficient degree of predictability if you're going to invest in something, but we also need to have the long-term perspective, as you say.
Yeah, absolutely. In terms of, you mentioned the last couple of years, be great to talk about what current trends you're seeing in the market as Nord Pool, as an exchange. What if we could discuss these? That'd be really good.
Yeah, I think the biggest trend for us as an exchange at the moment is the growth we see in the short-term continuous market, the intraday market. We see a really big increase in volumes and activity in the intraday market with algorithmic trading, high volume trading, or high frequency trading. And I think this is driven from the development we have more on the fundamental side of the market, which is we have less base loads and more renewable coming in. And with more renewable intermittent energy coming in, it's more difficult to know in advance, 1 day, 2 days in advance, how much production you will actually have. So I think this intermittency is driving more trading closer to delivery. And this is partly also a shift from day-ahead markets into intraday markets, but also a shift coming from the fact that you have more renewable energy in total.
Yeah. How big has that shift been in the last few years, would you say?
I think we have been waiting for this shift to take place, and I think we have except for Germany. In Germany, I think there has been a significant intraday market for years, but in the other European countries where you have a lot more flexible production, this has taken longer. But I would say that in the last couple of years, it has really taken off across Europe, and in even more so this year. And I think that from in the past, where intraday made up, for instance, 5% of the total volumes, I think we will see going forward that we are talking about probably 1/3 of the total volumes being traded in the continuous markets. So it's getting quite significant.
And when do you think it will be there? When do you think we'll reach that third market?
I think that will go pretty quickly. I think we will probably see that we are getting to that point, maybe not 1/3. That's not an exact answer, but let's say 20% of the total volumes, 30% of the volumes. I think that we will see that already in 25, 26.
Okay. And what is it today, roughly? Like, what would you say it is today?
I think for Nord Pool, which has the biggest volume in the Nordic markets, and but also have growing volumes in UK and in continental Europe. I think for us, it's more around. It has been less than 5% of the total volumes historically.
Yeah, so there's a big opportunity here.
I think it is a big opportunity here to enable to make sure that we have a performant intraday platform, which basically grants access to these volumes in an efficient way. We want to have to provide a solution to our customers that is fast, it's scalable, and basically we would like to, offer no limits for automated trading. I mean, that's our vision or goal.
So you like the increase in intraday, I guess, has led to an increase in automation, which has led to an increase in orders. Is that fair to say?
Absolutely. We see a huge increase in number of orders, and with such a number of orders and number of trades, the process has to be automated. There is no way that trading companies, producers, prop traders are able to deliver these amounts of trades without having an automated algorithmic trading system.
Yeah, and I speak to many different short-term power leaders, and they say exactly the same. Like, you'd have to have an absolute army of traders never stopping, and it's obviously with the market every 15 minutes it's changing.
Correct.
It's not feasible, is it really? But I guess there's huge advantages with the automation, running algorithmic trading. What would you say the big advantages are that you're seeing?
No, I think I think this in the future with more renewable intermittent sources or energy coming into the system, I think to have an integrated value chain from forecasting to production to trading and all the way to settlement is becoming more important, because you can't really plan weeks or days in advance in terms of how you're going to manage your assets and how much energy you will have and how you can optimize this for the future. I mean, you will still have that. In Norway, we have the hydro, for instance, or in some countries you have. In France, quite well how much to expect coming from nuclear, for instance. But the degree of renewable is going to be much higher, and to have an integrated value chain where you can manage your assets on a real-time basis, and also offer this into the market in the more in the continuous market is going to be more integrated value chain, and a higher degree of automation is going to be the key sort of in order to enable that.
Yeah. So with that higher degree of automation, higher number of increase in orders, I guess from Nord Pool's perspective, what are the key objectives for you as a business to help enable this switch?
Yeah, I think from what we want to provide, I mean, in many ways you can say that the exchange is a bit a cog in the wheel. It's sitting. You have TSOs and producers and exchanges, which is living in some sort of ecosystem together, and I think we want to ensure a well-functioning market that is able to produce a equilibrium between demand and supply, and this is a cornerstone of a well-functioning market. And in order to do that, we need to make sure that we have a market design which is future-proof, which is taking in the new realities, which is very much related to the energy transition. So that's how we see our role. And of course, we need to make sure that we have the right products and services to enable, to be a part of enabling that energy transition.
Yeah. So what are the key things that you're looking at as a business in the next 12, 18 months, 2 years?
So I think on a couple of things there. On the product side of it, we want to be the leading physical exchange in Europe, but
Yeah.
we also look at other areas where we are not present today. One area is, of course, the financial power markets. Another area, which is a big area, I think, for the future, where we have a lot of work to do as an industry, is flexibility markets, or how to harness or how to take advantage or activate more flexibility on the demand side. Another area is, of course, guarantees of origin. Another area we're looking at or thinking about is more OTC trading or bilateral trading, if we can standardize that in some way. So I think all of that is sort of things we are assessing at the moment, beyond our current physical exchange role.
Yeah. You mentioned flexibility there, Tom.
Yeah.
Could we just dig into that a little bit more, and why you think that that's such a big opportunity?
I think that's a big opportunity, and I think there is a lot of things we haven't solved yet, and it's not entirely clear, I think, to the entire industry either, how to do it. But of course, the fact that we have less flexibility on the production side means that we need to compensate for that somehow. And I think that has to do more with the demand side. It could be industries that has agreements to adapt their consumption to the scarcity or surplus energy, and they get compensated for that in some way. They have a competitive advantage when there is surplus situation, and they have the ability to reduce their consumption in a deficit situation. So that is one side of it. Another side of it is that flexibility is also could be coming from hydrogen. It could be coming from storage, or I mean, it will probably come from both, and also pumped hydro could be part of the solution there. But I also think another side of flexibility is the more sort of decentralized assets. It could be residential areas that are producing solar energy, or some heating from the ground, which they are exploiting and are self-sufficient most of the year, and or could even feed something into the surplus into the grid, and they may have to have more energy coming from the grid to them in the winter time. I mean, I think it's the sum of everything. I don't think there is one sort of answer. I think all this needs to play together in the future.
Yeah, absolutely. Flexibility is such a big topic. You know, when I'm talking to trading leaders, they're talking about battery storage, optimization of battery a lot. A lot of people think there's a huge opportunity there.
Yeah, it is. And whether we will see marketplaces for flexibility in the future, I think so. I don't think we have figured it out fully yet, but it's quite high on our strategic agenda.
Yeah, I guess that's such an interesting thing about this market. It's so fluid, and things are changing so quickly, and there's lots of things that still could be done moving into the future.
It is, indeed.
Brilliant. Tom, I think we've covered the core things there, and I appreciate your views on the current state of the market, the trends. I'm sure for the audience that will be very insightful. So thank you for your time there, Tom.
Thank you, Patrick, for having me.